One of the most common websites investors use is Yahoo Finance. Now, while it's simple enough to be able to hop onto a website and enter a ticker symbol, it's really important to be able to understand what the information is that's given on the screen. So today we're going over the summary screen for Yahoo Finance and what each of the individual line items mean on that screen. Here we are on the Yahoo Finance summary page for Apple stock. So right up at the top, we've got the price, and we have the percentage that it changed throughout the day. Then right here, we see after hours, it went up 0.11% in after hours trading. And down here, we've got the previous close, which is the previous trading day, what price it closed at. Then we had open, which is the current trading day, or most recent in this case, because we're looking at it on a Saturday. This is the price that it opened at. So the market opened and Apple was at 189.84. Next up, we have bid and ask. So bid is the most recent bid that someone's put in. Another way to say this is bid is the most recent price that someone was trying to buy the stock at. Maybe a fund manager was trying to buy 900 shares of Apple and they were willing to pay 190.88 cents per share. Now right below that, we've got ask, which is the most recent sell proposition, you could say. Someone is looking to sell their shares, 800 of them, for 190.93 cents. Then down below that, we've got the days range, which is 190 to 192. That's the range throughout the day from the low point to the high point. After that, we have the 52-week range. Similar thing, but that's over the last 12 months. What has been the high price? What has been the low price? Low price is 124. High price was 194. Next up, we have volume. The volume is the number of shares that have been traded during the trading day that this information is representing. So whether it's the current trading day or the most recent trading day. Now, if this is a current trading day and market is open, volume you will see will keep going up because as more and more orders are put in and more shares are transacted between buyers and sellers, this number keeps counting as one buy is one tick on the volume. One sell or one share being sold is one tick on the volume. So you can check this throughout the day and you'll notice that the volume increases as the day goes on because more transactions are being done and more shares are trading hands. Hey guys, if you're getting value from today's video, can you make it a point to whack that like button? Also, if you enjoy learning about personal finance and investing in the stock market, make sure to subscribe for future videos. All right, back to the video. Then we had average volume. Average volume is the same as volume, how many shares are traded throughout the day, but this is an average over a long span of time. Below that, we have fair value, which you can hover over this guy and it'll tell you the fair value is the appropriate price for the shares of the company based on its earnings and growth rate, also interpreted as PE ratio equals growth rate. So this is a pretty common valuation that Peter Lynch would talk about. The PE is less than the growth rate, then it's undervalued. That's just kind of a rule of thumb that he liked to use. And in this situation, they're just using analyst EPS growth rate for the next 5 years, and they're comparing that to the PE ratio. So it says it's overvalued because analysts are not expecting EPS to grow over 30% in this case, because the PE is 30 over the next 5 years. And that's just kind of a little automatic trigger that Yahoo Finance calculates. Something you can pay attention to or not. Personally, I don't really pay attention to that. I focus more on free cash flow and other valuation metrics. Next up, we have market cap. This is just the number of shares times the price per share, also known as the total market value. This is at 2.99 trillion. Then we have the beta 5-year monthly, which beta is a measure of volatility. In this case, they're calculated on the monthly change over 5 years. And beta is volatility measure measured against an indice. So what beta is usually tracked against, in general, the whole market has a beta of 1. So if a stock moves more than the market, it will have a beta higher than 1, in this case 1.29. And you will notice that between our low and our high for the 52-week range, half of 120 is 60. So that means if you slap that on top of 120, it's about 180. This stock has moved roughly 50% from the low up to the high. And the market as a whole, say the S&P 500, has not moved that much in the last 52 weeks. So clear indicator of, yep, this is more volatile than the S&P. So if we got PE ratio, TTM. The PE ratio is also known as the price to earnings ratio. This is calculated as taking the price per share and dividing by the earnings per share. So 190 right here over 5.97 equals 31.94. That's how I get the PE ratio. And TTM is just the symbol for trailing 12 months. So we're comparing the price to the earnings per share of the prior 12 months, as opposed to looking at the expected next 12 months, which is the forward-looking version of PE ratio. We had EPS, again, earnings per share. This is the net income that the company has earned per share. So total net income divided by total number of shares outstanding, and that brings you EPS. Again, TTM, trailing 12 months. For every share of Apple stock, there has been a net income of 5.97 attributed to each individual share. Next up is earnings date. This is just when the next earnings date is. Forward dividend and yield is the projection of future dividends. So often companies will give out guidance on their earnings, and sometimes they'll give out guidance on their dividends. In this situation, we see that Apple is forecasting and predicting a dividend of 0.96 cents per share over the next 12 months. Now this broken down into a yield is just dividing the dividend by the stock price, and that comes down to 0.51%. Next dividend date is a cutoff date. So since this company does issue dividends, they announce when they're going to issue dividends, and generally there's a date that cuts off when you can or cannot receive dividends. In this case, ex-dividend date May 12th means for their upcoming dividend, anyone who owns shares on May 12th or earlier will receive a dividend. But anyone that buys after this date is X'd out, I guess you could say, excluded from getting these dividends. So that is the ex-dividend date. When your target estimate, this is at 188. You'll notice that's lower than 190, which doesn't necessarily have to mean anything to you if you think independently, but where this number comes from is just down here with different analyst expectations and price targets. See low of 140, high of 240, 39 analysts pegging out their price targets for 1 year out, and the average is 188. And that's where we land at a 1 year estimate of 188. Hopefully that was helpful. If you have any feedback or questions, I would love to hear it. And make sure to follow along for more on personal finance and investing. All right, okay guys.